wouldn't surprise me if we saw maybe a 10% or a high nines, or maybe even 11%. So somewhere my estimate would be high nines to possibly 11% increase for inflation.
And I wanted to first discuss inflation. Now, you've said this coming CPI number could be double digits. The forecast right now is just over 8%, but it seems like we're continuing month after month to see increased inflation. Your take on inflation right now?
The thing is we're continually seeing these numbers be higher than what they're telling us. I mean, last year, the narrative was this inflation is transitory. We're not going to see numbers exceed these levels. It's going to go away quickly. And time again, these numbers were double digits. I mean, in probably real terms, because we're seeing double digit food prices increases. We're seeing double digit gas price increases. And so this number, the 7.9% number for the month of February, I don't think that's really indicative of what is actually happening in people's communities and what people are actually spending on their goods and the things they need. And so the reason why I said I think it's very likely we'll see double digit numbers, and very possible, is because these numbers were February's numbers and we're already at 7.9%. And February didn't account for most of the massive increases we've seen since Russia's invaded Ukraine. I mean, gas prices, food prices, just about everything have risen tremendously, and commodities continue to rise more, which means more expensive gas and food. So that's why I think, it wouldn't really shock me to see double digit increases, because I certainly think things are more expensive than what they're accounting for. I mean, an estimated 8 to maybe 8.5% increase. Well, I think gas prices have certainly doubled, at least in my area, over the month of March. So that's why I was thinking that it wouldn't surprise me if we saw maybe a 10% or a high nines, or maybe even 11%. So somewhere my estimate would be high nines to possibly 11% increase for inflation.
No, we are seeing prices increase across the board, and also gold reacting to this. Just a few weeks ago, we saw gold touching all-time highs. Your take on where gold is right now? We've seen quite a pullback since then.
I think that investments tend to get ahead of themselves, just like they tend to fall a little bit behind where they should be. And I think what we saw is last year, even though we had inflation, gold was going sideways. But if you look at the year before that, 2020, I mean, gold certainly outperformed inflation. It outpaced inflation, and it had a tremendous year. So I think 2021 was a consolidation year. 2022 is going to be a very strong year for gold, but you have to put things into terms and talk annualized price increases. So when you have gold rally 20% or more in such a short period of time, it only makes sense that you see a period of weakness following that and a period of consolidation, because I don't think that we're going to see a 200 to 300% year for gold. I think that, we could easily see a 20 to 30% year for gold. So what we're seeing now, I think, is just a very normal consolidation period from after what was a tremendous bull period. But after a year of weakness, and a lot of investors are discouraged with gold and with silver and precious metals in general. But I think what we're seeing is perfectly normal. If I'm holding my gold, we're holding gold for our clients, and we're just riding it out, and we're just going to wait and see.
A lot of people try to time the market, but in this kind of environment, it seems like maybe at least having a foot in the door would be good in this situation. Having some gold and maybe not waiting for a pullback, because eventually it is going to go higher. At least that's my take.
I agree with you completely. I'm not the type of person that likes to try to time markets, because more often than not, I get it wrong. And I know that's the thing for most people. The best thing you can do is just get in, get in, hold your position, identify these long-term macro trends. I think we're ending a 40+ year deflationary bond bull market, and I think we're entering more of an inflationary bond bear market, and inflationary periods also tend to push up precious metals prices. And so recognize that this isn't just a short-term gold rally. I think we're going to see long-term commodity prices rising, at least over the next 2 to 7 years. And I know that's kind of a wide range, but it's really hard to make price predictions and price targets, because the market fundamentals are changing so frequently. I think you just need to keep an eye on things and see what happens. But certainly, we're in an inflationary period. It makes sense to have inflation hedges. If you don't have any gold, maybe 5 to 10% of your portfolio. If you're comfortable holding more gold, I certainly don't think that that's a bad idea as things stand now.
Now, what is your outlook then for precious metals if we go to the end of the year? I know you have said that we could see new highs in both the metals this year.
That remains to be seen. I mean, certainly if things were continuing as they were during the month of February and March, when they were really rallying after the Russia conflict, record highs are very easily attainable. And we're not that far off record highs. I mean, gold hovering anywhere from 1900 to 1950. I mean, that only puts us within 5 to 8% of hitting record high territory. That's not an unrealistic move. Certainly not in an inflationary environment. And the end of the year, that's a long ways away. That's 8 months. So I don't think it's unrealistic that we'll see record highs in gold. Silver, on the other hand, silver has a lot of ground to make up. We would need silver to double from its current levels, which, I mean, it certainly can happen. Anybody who's looked at silver, it tends to do that. It'll do nothing. And then all of a sudden, in a matter of weeks, it's done something. And that something is quite something. So yeah, I think that record highs are in our future. It only makes sense. It's just the trend of inflationary cycles and commodity bull markets. So similarly, how we saw record high after record high after record high in the stock markets during their massive bull run, I think it's reasonable to expect that during the commodities, during their bull run, which will be on the backs of a massive inflationary period.